The moment we've been waiting for has finally arrived. After years of speculation, legal battles, and countless rejections, the U.S. Securities and Exchange Commission has officially approved the first spot Bitcoin ETF. This is not a drill. This is real. And within hours of the announcement, Bitcoin's price spiked, headlines exploded, and crypto Twitter went wild. But here's the question. Is this truly a golden opportunity? Or is it the perfect setup for the biggest bull trap of the year? Let's rewind. For years, crypto advocates have fought for an ETF, a way for traditional investors to gain exposure to Bitcoin without holding it directly. They said it would bring legitimacy. They said it would attract institutional money. They said it would change everything. And now that it's here, we have to ask, what changes and who truly benefits? Let's look at the facts. BlackRock, the world's largest asset manager, is one of the key players behind this ETF. They've lobbied for months, positioned their funds, and now they're ready. But here's the twist. While BlackRock's ETF is approved and investors are celebrating, the actual inflows are underwhelming. So, is this the beginning of a new bull market? Or are whales using the ETF hype to exit while retail jumps in? In this video, we'll break down how the ETF works, who's really behind the scenes, and why this could be a double-edged sword for Bitcoin's future. Let's dig in. Let's break down what a Bitcoin ETF really means, and why it's both powerful and dangerous. On the surface, a spot ETF sounds amazing. It lets people invest in Bitcoin through traditional brokers. No need to worry about wallets, private keys, or cold storage. Sounds like mass adoption, right? But here's the danger. When you invest in a Bitcoin ETF, you're not actually holding Bitcoin. You're buying a financial product that represents it. And the entity that does hold the Bitcoin, like BlackRock, controls that supply. Now ask yourself, what happens when massive institutions control billions in BTC? They don't just hold, they manage risk, they rebalance, and yes, they sell when it benefits them, not you. This centralization of power is the opposite of what Bitcoin was created for. Remember, Bitcoin was born out of the 2008 financial crisis to escape traditional systems. And now, those very systems are taking over its access points. Some call it evolution, others call it corruption, and it gets deeper. While the news of the ETF was breaking, whales moved massive amounts of Bitcoin. Some wallets sent $800 million worth of BTC to exchanges. Others withdrew just as much, quietly, without headlines. Are they positioning for a rally? Or are they setting up a trap for retail investors driven by FOMO? This is where you need to be careful. The crowd celebrates ETF approval, but smart money, they watch liquidity, volume, and narrative timing, and they act before the public catches on. So what now? Is this the moment Bitcoin breaks free and reaches $150,000, $200,000, even $1 million? Or is this the moment retail investors walk into a carefully designed funnel, believing they're buying the future, while institutions are selling the hype? You decide. This is not financial advice. This is a wake-up call. Before you buy, ask, who's really in control of the market now? Are you investing in freedom or funding the very system you tried to escape? Because when the hype fades, only those who understood the game will still be standing. So, what do you think? Is the Bitcoin ETF a breakthrough or a trap? Are whales preparing a bull run or setting up a silent exit? Let us know in the comments. And if you want real, no BS crypto updates like this, subscribe to BitFlash News. We ask the questions no one else will, and we say what others are afraid to. This is BitFlash News, and we're just getting started.